Welcome. Three worst days to trade the market by Trader Bastion. So, the three worst days to trade the market. What are the three worst days to trade the market? Fridays, the last day of the week. Mondays, first day of the week. And days that you feel less than 100% because the market deserves nothing less than 100% from traders. So right here, the reason why Fridays is the worst day to trade the market is because we have traders taking profits and offloading their positions. So because of this, the market goes into a range. And on Mondays, we just have a novel day of the week, the first day of the week. The market is feeling new and professional traders wait for news release from Asia, from London, from New York, so as to have a perspective into the direction of price. And in my opinion, Friday is the market makers accumulation phase and Monday is the market makers manipulation phase. So these days are crucial and important to be noted, as knowing what not to do is as important as knowing what to do in the forex market. And days that you feel less than 100%, maybe whatever impediments that could have caused a dwindling in emotion, be it family issue, whatever it is that doesn't make you feel straight or think right, because the market is an avenue that demand 100% from traders. So now let us get to the chart to see all this in real time. In a world of limitless possibilities, there are 1,000 and more case scenarios that can play out. So in the market, less is more and more is less. A lot of traders feel that they need to be trading every day, they need to trade every session, they need to trade every candlestick, and that is nothing but the childlike notion that more work means more progress. But in the market, less work means less progress. In fact, there are traders that take just 2 or 3 trades in a year and they are highly profitable. There are even traders that trade 2, 3, 4 times in a month maximum, and sometimes some months they do not even trade at all and they are highly profitable. So it all depends on the quality of your trades more than the quantity of your trade. However, high frequency traders, they trade often, but the reality of it is less is more, because this market is a very risky environment, and the more you trade, the more you expose yourself to risk. So why we are here today is for us to know, just as we have the best days to trade, we also have the worst days to trade. Not all times are created equal in the market, and there are worst days to trade. In my opinion, the worst day to trade is the last day of the week. Why is this? That is the weekend, Friday. The reason being is institutional traders that have been profitable for the week, they offload their positions and take a break. They go and enjoy their money, they go and enjoy the weekend. So on Fridays, we can see that the market, most of the times on Fridays, it is only half day. So by 2 p.m. London time, most of the time you see that the market is quiet. This is a Friday here. You can see the market is quiet and is in a range. This is another Friday right here. You can see the market is quiet and the market is in a range. And here is another Friday. You can see the market is quiet and the market is in a range. So Fridays, these are days when institutional big banks, they offload their positions and they go and take a break. So Friday is not an advisable day to trade. However, there are some pairs that they move on Fridays. Nevertheless, the rule still stands that Friday is not much of a beautiful day to take trades. As traders, in every situation you want to position yourself in a place where the odds are starkly in your favor, because if you don't do that, the odds would always be against you. So we can see we have been marking the range on Fridays, and you can see that most of the days on Fridays the market is range bound. This is the 4-hour chart, and you can see the last 6 candles, which is the Friday. You can see it is range bound. So all these are facts and evidence. We are not just speaking based on personal preferences. So you can go mark the chart and see the reaction of price on Fridays, and you see how price dwindles on these days and how the range is very thin on Fridays. And as we know, in the market makers template, Friday is the day that the market maker accumulates contracts so you can manipulate them on Mondays. So another worst day to trade, in my opinion, is Mondays. And the reason being is, on Mondays most professional traders, they stay away from the market because they are waiting for news release from Asia. They are waiting for news release from London as well as New York, so as to have a view into the performance of most currency pairs. So on Mondays is also a quiet day in the market. And quiet days that don't have opinion, is Mondays, and days that have very thin range, you want to avoid such days. You by all means you want to avoid such days, because on Mondays, in my opinion, in the market makers templates, Monday is the day that the market maker manipulates the chart. And he does what? He manipulates the chart to trap traders so he can move in his intended direction by the middle of the week. So you can see most of the time Monday is in a range. More often than not, you have Mondays in a range. So week in, week out, most often you have Mondays in a range. So that's why as traders we want to avoid to trade on Mondays. And regardless of your strategies, I can bet you on Mondays you are going to have your stop loss hit in incredible ways. So Monday is also a trap of the market, which I consider not a good time to trade. So as I've stated earlier, I said on Fridays, because you have traders offloading their position. On Mondays, you have the hedge funds, banks, market makers, the whales. They are not yet in the market, and they are what? They are waiting for the muddy water to settle. They muddy the water to make it seem deep. So what are you meant to do? You are meant to wait for the water to settle so you can see clearly the direction. Another worst day to trade is whichever day you are not in the right emotional or mental state. Whatever you could be passing through, it could be a breakup, the death of a family member, personal reasons. You want to avoid the market on these days because the market requires 100% of you, which is not just your mental state well-being, your psychological well-being, your emotional well-being. Everything has to be perfect for you to trade effectively. So here we are on the weekly chart, and let us look at the behavior of price during the week. So you can see on Mondays is thin. You can see middle of the week price moves up, and you can see on Fridays is also a thin range. So you can see as the market opens here on Monday, it is thin. You can see the market manipulating, and you can see the range in middle of the week. So look at this bar chart. You can see where we have the big moves. You see the Mondays in a range, market manipulates, and the middle of the week you have the big move. Look at the impulsive candlesticks. You see on Mondays when market opens, it manipulates, and you can see middle of the week, that's where you have the impulsive move. Look at these also. You can see Mondays not much of a move, middle of the week you have the impulsive move, and Fridays market goes back in a range. So as you can see, the human behavior shapes the market. And during the weekend, as we know that people are resting, this is the Friday of this week. You can see, let's use the arrow to annotate it. You can see coming into this week on Monday, the range is thin. You have a manipulation to the upside, and you have a long range down, and the market goes back into consolidation. So following from this and just observing the bar chart, the open, the close, the highs, the lows, you can see that Mondays and Fridays are always in a range, and they are thin, and the market does not make a good move, but the middle of the week you can see a good move. You can see this is the market open of the week, middle of the week you have a good move, you see. So, and as traders, we are in a very competitive environment, and you always want to place yourself in a position to win. So you can see these are the impulsive move you want to be involved in. You can see that it is always during the middle of the week. As you have Mondays, the market open, settles, manipulates, and rise down. So the bar chart, it shows us every week, and we can see the movement of price every week. You can see this particular Monday, price manipulated up, middle of the week price came down before going back into a range. So that is just the simple way that the market moves. Plan your trade, trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, subscribe, share, and follow for more.